Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for January 2018. Let's take a look at key highlights of December. GDP recovered to 6.3% in Q2 from a low of 5.7% in Q1, driven by growth in manufacturing, while services and agriculture remained lackluster. The BJP's election momentum continued to hold sway, retaining all-important Gujarat albeit with a thinner margin, and wresting power from Congress in Himachal Pradesh. Brent crude ticked up above the $65 per barrel mark and is likely to bring inflation and fiscal deficit back into the spotlight. These levels were last seen in June 2015. US Fed increased the funds rate by 25 basis points for the third time this year, while maintaining its projections for 3 rate hikes in 2018 and 2 rate hikes in 2019 on the back of strengthening labour market and robust economic growth. As 2017 comes to an end, the stock markets have given ample reason for investors to rejoice, as Nifty is up 30% since January 2017. Indian equities market saw multiple levers for positive sentiment this month. India's recovery in GDP growth rates and victory for ruling BJP in 2 state elections. Short term has seen a fear of fiscal slippage from increased spending, decreasing revenues, and rise in crude price. But stable macros will help retain FIIs going forward. We continue to remain bullish on Nifty as there are long-term growth levers. Building India encompassing sectors like housing finance, cement, home building materials continues to be the broad theme which we favor. EPS estimates for Nifty index for financial year 18, financial year 19 and financial year 20 are Indian rupees 496, Indian rupees 623 and Indian rupees 740 respectively. As per blended estimates, index is currently trading at PE of approximately 17.7 times 1 year forward. We recommend investors to deploy 33% of fresh equity allocation, while the remaining can get invested over a 3 to 4 month period in a staggered manner. The 10-year benchmark GSEC is hovering in the range of 7.25% to 7.40% on a semi-annualized basis. The markets have seen a lot of volatility in the last few days due to chances of upset in Gujarat elections, rising crude prices and additional government borrowing. RBI in its December monetary policy review maintained status quo, while raising the inflation trajectory from 4.2 to 4.6% to 4.3 to 4.7% for H2 financial year 18 as CPI soared to 4.9% in November. Going forward, we may see a policy bias towards fiscal spend with rural focus as 8 states head for polls between now and general elections 2019. We expect a fiscal slippage of 0.2% for financial year 18 to 3.4% at the centre level, with the combined fiscal deficit expanding to 6.9% from 6.4% last year. We expect yields to trade in the range of 7.30% to 7.60%. Yield movement hereon will depend on inflation trajectory, crude oil price, adherence to fiscal deficit target, nature of recapitalization bonds and global factors. We expect further rise in yields if the CPI crosses the 5% mark in the months to come. We recommend investors to allocate 100% of their fresh fixed income allocation to long-dated buy and hold strategies and active accrual strategies with low to medium duration. Wishing you and your loved ones a very happy and prosperous 2018 from Edelweiss Private Wealth Management Team.